Welcome back, value investors. New episode of 36 Square Capital Value Investor channel. So this time I will be speaking about the Wolves of Wall Street, and let me just explain why I'm taking up this subject. So probably you have been already expecting the vlog of INSEAD, as for those who follow me, I was last week at the first module of the International Directors Program, but that is not ready yet. But I came across a very interesting article, and this article is called The Bull of Wall Street, and it's a test. It's the first study that has been done on the effects of testosterone, which is a strong male hormone, and how that affects, so the levels of testosterone, how that affects, in fact, trading decisions and trading behaviors, and if that can potentially build up asset price bubbles. So the study has been created by a guy called Amos Nadler. He calls himself the Professor of Wall Street. I mean, he has a website as well. I mean, he holds a PhD in behavioral finance and neuroeconomics and a master's degree in economics. I found nonetheless a little bit, I will say with all due respect for the guy, a little bit arrogant to call himself a Prof of Wall Street, but anyhow. But the study, I mean, with other people, so they did a study around this analysis and understanding how testosterone levels can have an impact on trading behaviors. How did I come across this study? So as I said just earlier, I mean, I was last week for my first module, so it was a full week at INSEAD, which is one of the leading business schools in the world, in Paris Fontainebleau campus, where I was undergoing the first module of my International Directors Program with cohort 56. So the next one will be in March in San Francisco. For those who follow my YouTube channel, you may have already heard about it. And in fact, it was day 3 where we had a full day on value creation and destruction, a financial perspective for board directors, where we had Lily Fang, who is a Dean of Research and also Professor of Finance at INSEAD. She holds a PhD as well from Wharton School in Pennsylvania. And actually she shared with us this article, and I found it extremely interesting because I didn't know this article. And normally, I mean, I read a lot, and I found this research very interesting, and I was really curious, what is the impact of testosterone on trading behaviors? So let's go into it. So the main question that the study was asking is, does testosterone, do the levels of testosterone cause traders to overbid for financial assets, and does that drive large price bubbles? So there is a specific setup. I will not go into the details of it, otherwise the video would be too long. You can read, I've put the URL as well, you can read, in fact, the study. It's a couple of pages to read, it's very interesting. And I mean, when we discuss, of course, about bubbles, what are bubbles? Bubbles are defined as upward deviations from assets' fundamental value. We can always discuss what's the fundamental value of an asset. I mean, I'm discussing this in a couple of my trainings when we discuss about how to value companies, for example, because that's the assets I'm most fluent in. I mean, other assets like options, etc., it's not my thing, or coupon or bonds, for example, with coupons. My thing is really trying to understand the fundamental value of company assets and companies in general. So the method was pretty, so the experimental test was pretty, let's say, scientific. So on day 1, the traders were taken or drawn blood out of their body to see what was the level of testosterone that they had. Then they applied a gel. One part of the cohort received a gel with testosterone and the other one with placebo. And of course, nobody knew which one, except the researchers, who was getting the one with testosterone and so the placebo, so without testosterone. And then on day 2, a simulation. There is a certain setup to do those simulations that you can read in the research document. So a second blood draw was taken from the traders, and then they went into 3 rounds of trading. And I mean, they were playing also with real money. Just to add, in terms of, I mean, we are speaking about scientific experiments, and of course they analyzed between day 1 and day 2 how were the testosterone levels. And you can see in this graph, and you can see it again in the paper, that indeed through the application of this gel with testosterone, the levels of testosterone indeed went up. Compared to the ones that had placebo, the testosterone levels remained, let's say, the same just really marginally higher, probably maybe some kind of excitement that was going on in the body, but it was absolutely the same. So what are the results? So the results in fact confirm that traders in cohorts receiving higher levels of testosterone indeed were bidding higher. So they were bidding higher, leading with higher transaction prices, and relative to markets, relative to the fundamental value of assets, versus the traders that did not receive placebo. So this is again confirming to me that yes, bubbles are created because people are neglecting the fundamental value of an asset. And you see it on the graph. After 3 rounds of trading, you see the placebo treated sessions and the testosterone treated sessions. So indeed, the curves explain. So the blue curve and the red curve are, let's say, the fair value, and you see in fact the other gray curves how traders were indeed trading at a certain moment in time, and you see that on the right hand side indeed they were trading much higher than the fundamental value of the assets that they were trading. So of course this obviously reminded me of some movies that I watched, probably you watched them as well, like The Inside Job, The Wolf of Wall Street with Leonardo DiCaprio, and also The Big Short. Some of those are related to the subprime crisis, but again obviously this reminded me the typical male behavior of Wall Street traders with those high levels of testosterone, how they were indeed creating bubbles, and obviously at a certain moment in time the bubbles were just exploding. So again, read the study if you are interested in more details. It was pretty interesting, and for me it was a learning moment because I did not know that such a study had been executed. I knew about behavioral, let's say finance, behavioral economics, how behavior of people can influence markets, but I was not aware about this study, so I wanted to share this with you. I hope it's useful for you. And as always, if you want to have more information or you want to go into one of my trainings, go on the website 36squarecapital.com in the education part, and there you have the links to the various trainings I'm giving on the various educational platforms like Skillshare, Udemy, Skill Success, and Thinkific. Thanks for your attention. Do not forget to subscribe to my YouTube channel, and of course looking forward to talk to you in one of the next episodes or in one of my trainings. Thank you.